What does the new gold fields look like? Our production from South Africa was around about 48%. We now dropped to 13% production from South Africa post the deal. And with South Deep at full production, all other things being equal, we'll be up to 28%. The reserves, of course, are still highly concentrated in South Africa, with South Deep making up 62%. If you exclude South Deep, which is a build-up, you can see the rest of the portfolio makes a very nice margin, about 25% after capital. So these assets are cash generating. And with South Deep expecting to ramp up this year, that'll ease the cash pressure on the rest of the group. For the first time in the industry, we started to look more at making money as opposed to making ounces. We've got all of the essential ingredients in place for South Deep to deliver. So that's what the new group looks like. Australia, Ghana, and Peru being the main operating platforms in addition to South Deep. And of course, we also have the international project portfolio that you can see here. APP in Finland. You can see far southeast in the Philippines, Chuquipaca here in Peru, Yamfilila in Mali, and a whole slew of exciting advanced exploration projects. With a reserve base of about 64 million ounces, that's sizable. We cut out the South Heap Leach operation. Exploration has come down from about $125 million to 80. At St. Ives in Australia, we cut out the high-cost heap leach operations. At Agnew, I think that's a fundamental change. That was probably the worst performing operation in our group in the second half of last year, the first half. And in the second half, it was the best performing operation because we cut out the low-grade mining, we concentrated on the high-grade Kim load, which is around 10 grams a ton, and we now got an operation that's going to be smaller but more profitable and cash generative going forward. Tarkwa, we cut out the South Heap Leach operation where we were using a high-pressure grinding roller to take some of the harder material and try and leach them. It wasn't really making much money for us, trading dollars, as they say, so we've cut that out. Damang is a mine in transition, and so that hasn't had a good year, but we now have to capitalize on the significant exploration potential we've unlocked through the drill rig. 10 million ounces of resource, 3.5 million ounces of reserves. We have a wonderful opportunity here to recapitalize that mine, and that's going to be the big focus in 2013 and 14. And Corona in Peru, there is the potential for us to build another sulfide plant, bring forward production. The industry has to change. We have to manage our assets for cash. And I think we've got to beware of the lure of the marginal ounce. You really have to drive growth judiciously. You should only build new mines if they make real returns, and focus possibly more on smaller mines, if you can find them, discover them and build them, or buy them, and on brownfields opportunities, much lower risk, higher returns, lower paybacks. Let's not commit to any long-term production targets for the group. Let's rather indicate what we can do in the short term, but what our strategy is for the longer term.